Good morning, Steve Reed in Chicago with the morning grain comments. Well, prices are higher overnight. We've got beans up about 9 cents, meals up another $1, while soybean oil is almost up 1 cent per pound. Corn's up 3, and wheat's anywhere from 1 to 4 cents higher. Stock market's mixed. We've got the dollar a little bit higher, while crude's lower and copper's lower. I think in China, they're looking for ways to try to lower coal prices. So that has energy markets on the defensive. There's also talk that China may ban exports of fertilizer to try to preserve for their domestic supply. U.S. fertilizer prices are already higher, and this could even push fertilizers prices even higher. There is some talk about China may be looking for a few cargoes of U.S. soybeans off the P&W for February. And that when we look at some of this market, we've seen a 50-cent rally in beans from the September lows, almost a 40-cent rally in corn, and a 40-cent rally in wheat. We're looking at some pretty strong resistance in the beans around the 1243 area. A trade over that, make it test 1250. That's the upper end of what some people thought was a trading range. On the corn side, again, we're up against some resistance at this 534 or 535 area. Trade over that suggests on a chart that we would go to 548. And in the wheat, we've been in a 760 range. We would expect the market to test the higher end of that range due to low global milling stocks. And also the fact that maybe the USDA hasn't fully shown the drop in last year's global production, and the fact that many of the wheat buyers, especially North Africa, Middle East, are short. We also note that because of Brazil political problems and inflation, their real is at 6-month lows. That and a little bit higher board triggered a little bit of farmer selling down there, but they're basically out of the corn and soybean market, and U.S. is the place for people to buy until their new crop. Also, the Brazil truckers are threatening a strike because of higher diesel fuel prices. Matif rapeseed made new contract highs, while Canada continues to trend higher. And I think in general, the corn market is looking for new demand. It's been 5 months since China has come in and bought U.S. corn. EU imports of corn is down 31% year on year. There's no Brazil, there's no Argentina, there's a 25% duty on U.S. imports. So that corn market in Europe is probably going to remain strong. The EU shipments, though, of wheat is up to 10 million metric tons, which is 60% above a year ago. And it probably can't sustain that, and they'll probably have to start lowering their exports. Russian wheat prices also continue to rally because of higher export tax, but now with this rally of 40 cents in wheat, we are less competitive in 2022 for buyers for U.S. hard wheat than we were 40 cents ago. I think that we'll be watching the weather and talking about La Nina, dry in Argentina, southern Brazil, dry in the U.S. southern plains. Next week, U.S. Eastern Midwest should get a shot of rain, and then we could turn drier. Temperatures near normal. And the Russian Black Sea area is also dry. Have a safe trading day.